Good afternoon, everyone. It's Brian Caprice from Creep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. I'm going to say interesting day in the markets. Not the rosiest of days, but again, these are days that you expect. And I actually, with everything, in looking at charts today, I will say I think it is setting up for a very interesting end of the week. I know it's only Tuesday, but with some of the things that are coming with earnings and everything, this actually kind of makes a lot of sense today based off the news and based off what we have coming. And again, I'll explain that in a little bit, but it is April 26th, 2022. Thankfully, I still know the year. April's already gone. You came, we blinked and it's already past us. Not that Mother Nature knows what month it is. We had, 70s, then we had 30s, then we had 80s, and now it's back to 60 degrees with rain coming and cold. And I heard that there's snow forecast in Chicago. And my sister in Austin, Texas had lightning storms with hail yesterday. So Mother Nature is still trying to figure out what season we're in. She doesn't know that it's April 26th and that it's springtime. We're all looking for warm and ready for summer. Yeah, we'll get it one of these days. Anyway, let's dive into things for the day. If I can click on the right counter. For those of you that are new today, welcome. I love having new people out here. It's always great. You guys are more than welcome to ask questions. In fact, if you're new, as you guys know, again, I always give out my email address at the very end of the presentation. You guys are more than welcome to email me. There is a lot going on. This time of year is always the busiest with the boys, with being their coach, coaching two different leagues, with being a commissioner for them. Actually, my mom had surgery yesterday, so it's me and the girl today. It's always crazy. So it may not be an immediate response, but if you do email me, give me a little bit of time, and if I don't respond back in a week, shoot me another one. I probably just missed it in there because it typically doesn't take me that long. But anyway, basically, so you guys know what my background is. I've been trading. I guess I call myself a Y2K trader. Not everybody knows what Y2K is. It just kind of ages me. But I started in 1999 is when I really started to get serious about the markets and focus on education and trading. It's funny. I still remember the first stock I ever got into. I got into with my dad, and I was like, "Here, Dad, buy. Definitely buy this." I read something about it, and it was one of these not pump and dump, but it had already done its move. I kind of got into it late and learned a valuable lesson with the first stock trade I ever got in. It's kind of funny. But over the years, obviously, learned a lot of different things: stocks, traditional options, learned Forex. After about 4 or 5 years trading, loved it. Learned to trade futures after that. Realized that really, kind of, I guess Forex is probably what I love most. I can trade all of them. My wife is a registered individual, so unfortunately, I am excluded from trading individual stocks because of her job. It's just the way the financial industry works. But everything else out there I do love. I became a financial advisor. I actually know a fair amount about wealth management as well, and love that industry. It taught me a lot about bonds. It actually helped me, kind of learn how big and how influential that market actually is. It's something that I realized that being on the outside, you didn't really hear much about it. When you're learning to trade, all these people, these gurus, no one ever talks about bonds. You're like, bonds? What are bonds? Learned a lot about them. It was a great experience. Began teaching and really found my love and got a passion with teaching people how to do it themselves and not need that industry, more or less. But I can say I did work on Wall Street, not as a floor trader or anything like that. I actually lived, my apartment was 2 blocks from the New York Stock Exchange. I actually did work on the official Wall Street. The bull was actually right outside my office window, so I could see everybody rubbing the nose and everything like that. Very cool experience living in the financial district and kind of being in that environment. So very blessed with kind of the experience that I've had. I love looking at strategies. I love learning new strategies, kind of seeing where the downfalls are, how to make them better. Love that kind of stuff. I've created a number of ones that I've kind of packaged together for myself, particularly with Nadex. Again, very much an if this then that trader. I guess I would fall in the category as a price action trader. Not very big on indicators at all. I don't like the kind of lagging sense of them. I will use them for confirmation as well as kind of what the overall public is using. Again, when there's certain ratios, magical, it's kind of like I feel like I am more of the Han Solo of trading versus like the Luke Skywalker, right? I don't believe in the mystical, percentages and things like that. I do know that people do believe in them, and again, that's how I use them. Is that, hey, listen, a lot of people are going to be looking at this. Is this a good opportunity for me? But I go back to what I've seen. I'm one of these things that I got to see it. So With that, this is actually a super outdated picture, and I say this every week, and that's kind of a reminder. We've been talking about it the last 3 days. Jen, you saw her this morning if you're on the session. She obviously doesn't look like this. Her hair is as long as Melissa's there. Asher on the left, his hair is quite a lot longer. I obviously have a beard. Reese, the one with the long hair here, actually has the short hair now, so it's kind of crazy. And Jen, hers is literally down to her butt. So, and now there's a boy, right? There's a boy involved in all this as well. So another one. With that said, let's move into, again, our overall presentation today. Before I begin and look at charts, I do have to mention this risk disclaimer. You guys already know this before, but and this is trading in general, right? But trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at the end of their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is being construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of Crypto.com. Let's go in. There we go. All right. The agenda for what we're going to cover today, upcoming news events. Like last week, this is not a very, very big one. When I say big one, there's not that many out there. There is a few. There's one tonight that's not too bad. There was one yesterday that I mentioned. If you guys attend the morning show, for those of you that are new that don't know, I do co-host a morning show. We broadcast over YouTube every morning on Nadex's YouTube page. We go from 8:45 to 9. Yesterday morning, I was talking about the BOC, basically their version, their central bank president, Macklin, and talking about how great of an opportunity it was yesterday when he was testifying. We all know how testifying in front of our, again, there's this Parliament, our Congress is here, right? They ask a lot of questions, pointed things. Why is inflation so high? There's only one response to it of how are you going to handle it going in the future, and I thought it was a great opportunity for CAD strength to roll back in. I'll actually show you some examples of what they look like yesterday. And again, I don't give out trade recommendations during these presentations, but again, these are scenarios that happen again and again and again and again. And I'll use yesterday as a learning experience. So hopefully you can find your own going further into the future. And what we'll do after that is we'll look at indices. Indices have basically been on one ride and it's down so far today. It actually triggered earlier today. It kind of hit a pullback. Again, it makes sense why it did. I'll show you why it made sense. And again, with all the news headlines, I'm kind of expecting it. But I am kind of looking for reversal opportunity and some potential coming up. Reason why? We have some big earnings. I think Todd and I counted, and it comes up to about just under $4 trillion is how big these companies are. So they are quite large, right? Google and Microsoft, they have a lot of control over NQ, right? The NASDAQ. So could there be some opportunity? Yes, I would say absolutely some opportunity. After that, we'll dive into currencies. Currency market is a little bit flat right now. We're seeing kind of the exact opposite of what the general public believes right now. Obviously, we're seeing some yen strength. The pound's having some problems. While every country is talking about being able to avoid that recession, I think the pound at this point is pretty much just under the opinion that, what? Yeah, we're going to be in a recession. There's nothing we can do about it. Can't stop it. It's going to happen. We just got to take it. And I feel like that's kind of where they're at now. And we're seeing, weakness because of it. It's an interesting scenario because I truly believe that everybody will move into a quote recession at some point here. It's nice that people are like, well, we're trying to avoid it. It's our goal to avoid it. I think the pound is just like, yeah, we're in, we're going. Let's do it, right? Let's roll. And that means they'll probably be the first out of it because they're kind of acknowledging it. It'll get baked in. And then when everybody else is kind of like, oh yeah, by the way, we are in a recession. Inflation was not transitory, right? The pound will really kind of take off. So, but we'll cover forex and then we'll cover commodities. Commodities has been a very, very interesting, I'm going to say game because a lot of the prices currently right now aren't justified. Very, very big speculation market, and literally at the drop of the hat, they're just bouncing all over the place. There's been absolutely no price stability. The response to a million barrels a day of strategic oil reserve being released was like nothing. The price actually went up, and then all of a sudden, China locking down sent prices dropping, and now they're starting to kind of rally back up again as people are realizing that yeah, we're locking down, but again, we still need oil. The demand is there. We need it, right? We need it, right? Because people need They don't want, they need their oil, right? They need their fix. So we'll cover commodities as well. Trying to see if there's anything else to add into that. Probably not. So with that, let's go over to, here, let me get this up here. I got to click different windows. Let's go over right there. All right. So there we go. Just making sure everything matches. This is where we are currently right now. Now, again, you can see as far as currencies goes, the biggest mover right now is the pound. And again, it's because, right here, more losses for the British pound as recession risks burn brighter. Again, acknowledging that, hey, listen, it's a risk. We're probably going into recession, just so you know. Yeah, they are. I mean, everybody in the world is going to assume that we're not, that we're going to have this, quote, safe landing. Yeah, that's a lie. Just like, transitory inflation was. We're going. There's no ifs, ands, or buts about it. We will. And it's not bad. It's not unhealthy. It's what should happen. We're so far into a bull run at this point. It needs to happen. We need to have a little bit of a pullback. And again, that's typically, it's healthy. We burned way too hot. We're at 40-year inflation. We need to calm it back down again, right? There has to be some changes. But right now, because of the pound and that, you're seeing again, minus 109, minus 152. Those are kind of the big things. Everything else is more or less stabilized itself. And even the euro pound up 31 a little bit, not even a full day's worth of movement in the last 24 hours, but not bad, not terrible. Now, as far as upcoming opportunities, all right, so I'm going to cover this in two pieces. Tonight at 9:30 p.m., CPI. Now, you may have no idea what CPI is. It doesn't necessarily matter, but what you need to know is it's a gauge of inflation, okay? Right now, the United States, and why the dollar is so strong right now is because they've basically said, hey, without a doubt, we are raising interest rates. We know it. It's coming. We got to stop it. 40-year highs. People don't like paying for gas. Here's Australia's CPI. Okay, now Australia has made some very comments out there, but they're under the same gun that everybody else is that, hey, listen, inflation's starting to get out of hand. It's starting to hurt, okay, and they need to make changes. And the way you change it is to raise your overnight rates, your bank lending rates, right? So being at 9:30 at night, you may say, what the heck's going on at 9:30 at night? Well, our 9:30 is their 9:30 a.m. It's business hours for them. These tend to be like hidden releases where there's some really great movement. I'll show you how you can potentially play it. I'm not going to tell you what to do with it, but I'll show you how you can potentially play it. For years, I talk about how great. And when I learned to trade, for currencies, most of my currencies trading was at night. It's funny how people say you can't do it. You absolutely can. It's not that hard. And again, just because it's nighttime and it doesn't move a million pips back and forth, you don't need it to, right? It's all about your risk and your position sizing. So again, if you do like, nighttime trading, if you want to put some positions on before bed, here's an opportunity, and I'll show you how you can play it in a little bit. Now, going to tomorrow. Okay, tomorrow, there's not really a whole lot. We got some speeches, the BOJ report. Again, they'll probably be like, the yen is weak, the yen is weak. I mean, we've been hearing this as Chicken Little for a while now. There were some comments. Let's see, where is it? This guy right here. The former, what is it? Watanabe, the former chief, right? He says that the yen at 130, 135 isn't a disaster for Japan's economy. Before they were saying, 130, it starts to be a problem, right? He's saying 130, 135, it's not going to be a problem, right? The Bank of Japan does not need to intervene right now. It's not that weak yet. And because of that, you're seeing a lot of yen strength coming back in the market. Now, the dollar one has leveled out. The U.S. market obviously is affecting that one. Again, U.S. traders come online. We're seeing a lot of dollar strength come through. So we're going to get that, as well as we're going to get our oil inventory report tomorrow, okay? We will get our API inventory report tonight, our industry-specific report. That is not necessarily the biggest one out there. Hold on one second. It's not necessarily the most accurate, but again, it kind of gives us a kind of a foreshadowing of what the European session will look like as far as oil movement goes, and if there's a potential setup for tomorrow morning. Okay, that's on Wednesday. Thursday, we actually have a pretty decent number, the advanced GDP quarter over quarter. This is quite a big difference, right? The 6.9 to 1.0. And again, there's a couple different reasons in there, but this is quite a big one. And then there's the advanced GDP, price index. It's funny when this is 1% and this is 7.1%. You're like, huh? And again, I'll let you do the research on there, but again, they're also expecting a revision higher last time. And again, the one that I care about is the annualized prices in goods and services included in the GDP. Wow, everything is 7% more expensive this year. So what you need to do is you need to take this figure And when your boss does your annual adjustment, right? If you're a salaried employee, you know how every year they give you like kind of like a cost of living adjustment every year, and they're always like, yeah, 2%. You need to take it to him and say, hey, listen, the advanced GDP price index quarter over quarter is 7.3%. You're giving me, a quarter. You're giving me 0.25, 25% of what the actual adjustment is. You need to pay me a lot more money, right? And this is what employers are scared of. So this is actually a big number. It's funny that the GDP is only advancing 1, but the prices inside of it are going up 7.3%. Yeah, not fun, but that's what it is. And then we have unemployment claims. Again, 178. It's below the 200 figure. Anything below the 200 was considered like, oh my God, that's so much. Now it's kind of just the norm, right? Not necessarily a big deal. Oh, here we go. Love this. Hold on, I gotta pause. I gotta go to the headline. Says China needs the open capital markets for yuan to be a global currency. Yeah, this has been something for a long time. Again, China controls their currency right now, right? It's kind of like a pegged currency. It's not truly free floating like everybody else is, and that's kind of what he's talking about, right? Yeah. See, it says things such as the dollar and the British pound, right? They don't have capital restrictions as China does. So China is still kind of claiming the kind of third world emerging market type thing, but they're so big now. They're like trying to claim all the benefits of being an emerging market, but they're so big that they control it, and it's giving them advantages. This is something that's been talked about for a while. But when they do open it up to free floating, the pound and the dollar are in major trouble, because then there's nothing holding them back. And that's why China has not taken over yet. I don't know if China is trying to establish themselves as, like, if they could take over more transactions with it restricted, why unrestricted if you don't have to? So they're getting there, but I'm wondering if they get enough control in the world. I mean, they're getting a lot already with it restricted. It's a very interesting, again, doesn't need to happen. I'm 100% in agreement with him. But as far as China's take on it, it's like, hey, listen, we're taking over without that. Why would we just do that? That's dumb. And I agree with him. So, and then let's see, on Wednesday, there's Thursday, and then Friday we have core PCE, which again is one of the leading gauges of inflation. Again, we've seen it go up across the board. Again, they've already raised interest rate once. It's continuing to rise. It's not slowing down. It's not going backwards. And again, let's hope it only comes in at 0.3. Last time it was 0.4. This is where Bernard's like, look, it's working. It's working. The way that I look at it is, well, it went up 0.4% here, and then in December it went up 0.5%, and then it went up another 0.5, and then went up another 0.5, and then went up another 0.4, and then went up another 0.3. Am I happy that I pay 7.5% more for everything? No, I want to pay what I did last year, right? I don't want to pay 7% more. So Bernard has kind of a weird way of looking at this, like, look, it's working what we're doing. No, it's not. Not exactly. And that's why you did a 0.25 raise, and now everyone's like, oh, it's probably going to be at least a 0.5, maybe even a 0.75, because they were totally clueless on the first one. So other big headlines that we need to watch out for. That's it for the news for the week. So this is a big one right here. And again, if you guys haven't seen this before, Russia warns that Japan that it will retaliate if the scale of the U.S.-Japanese naval exercise increases. Okay. Now, this is not something that's new, just so everybody knows, and this is probably why the VIX is a little bit higher today. Again, naval exercises happen all the time. It's to make both navies better. Japan doesn't really have an offensive one. Theirs is more defensive, although with the capability of the current weapon systems, technically their carriers now are offensive, but the United States is not going to say anything because they're an ally. But if we suddenly triple our exercises, could Russia look at that as a potential invasion? Yes. And it would make sense. Again, they already don't like the fact that coast is something that they don't like to protect. There's all kind of heated debate between Russia and Alaska. The waters there are definitely heated back and forth. Again, it's two major countries with a border. Of course, there's some contention there. So that's one of the things jacking things up. Not that I think they're going to roll over and roll into Japan, because Japan is basically a proxy of the U.S. But I will say Russia and Putin in general are very sensitive, right? I guess is the right word. Very sensitive to any type of aggressive behavior. Doubling the size of your, again, it's a page out of their playbook. We're doing exercises against the border with 10 times the amount of soldiers that should be here. We're not invading, right? that's kind of how they're looking at it. So I get it from their standpoint. Here's another one too. I'm going to clarify. Last week we're like, hey, I've never seen this before. This joint discussion about intervention. Well, Japan basically said, hey, listen, there's no truth in media reports of a U.S.-Japan discussion of joint intervention. So it looks like Japan's like, whoa, we never talked about that, right? And like I said, I thought it was very, very strange. I'm like, I've never heard this before. Not that I've traded like bank for, currencies for a bank or anything at that level. But I've never heard in 20 something years of a joint intervention. There you go. So just correcting that one is like, listen, we didn't talk about that. So that's kind of an important piece of it. Besides that, I mean, the Donetsk region stuff, there's all that. I think this is something also that's kind of something we want to, kind of just bring up. Again, when Russia's talking about, hey, listen, there's serious danger to a nuclear conflict. I personally don't like the fact that Russia is talking more and more and using the word nuclear and getting more comfortable talking about it. I don't think that's necessarily the best thing. Like I said, once they start dropping it, it's kind of like, well, why are you talking about it? If it's so bad, why would you talk about it? I think that's kind of I don't know. I think that's something we need to, I don't know, just keep an eye on. Like I said, I think it's going to increase the VIX a little bit. And again, there may be some downplay in the market that, hey, listen, they're taking it to the next level, right? A couple different articles about the global supply chain crisis will flare up again, where it all began. Again, China's locking down. We know it. We heard that, again, they're going for one more month longer in Shanghai. They're talking about potentially locking and carrying it over into Beijing as well. Thus far, what have we seen? Their exports have not changed. They're still exporting plenty, but magically they're not importing now. Again, breaching a lot of the deals, that Trump was really pushing for. Like, listen, we'll buy stuff from you, but you have to buy stuff from us too. It works. It's not just a one-way deal here, and they're not doing it that way. And we're kind of, I don't know. The last we heard was that the tariffs may be removed completely. So it's kind of rewarding for bad behavior. I don't know, but again, supply chain. We're not hearing a lot of it now, but I can tell you. My wife sent me a picture yesterday, 2 days ago. She walked past the formula aisle for Kip, and it was basically empty. I was like, is it like supply chain? Was there a recall? And she says, yeah, it was a combination of two, right? I guess there was some type of a recall at a factory, and they don't have the extra supplies to bring in. And the entire aisle of formula at Target, right? Target had like one brand, one kind of one brand, and that was it. So yeah, so we're not done with this. We'll see it again. Again, if it continues in China, we will definitely see. Look, shipping congestion and Chinese ports combined with Russian war in Ukraine, it's a 1-2 punch, right? So again, more inflation pressures and headwinds to growth. So not necessarily the best, kind of scenario for us. And that's it. There's little things out of Ukraine. Germany's going to send 50 tanks. Okay, great. I would love to know what the true cost of this war really is. Like, how much did the U.S. spend, or not the U.S., but how much are allies spending versus what Russia has spent with old tanks and things like that they were using? Like, really, what is the, again, everybody's asking for more money to build new stuff, but what is the total cost? Like, if it costs $100 billion, right? $100 billion to worth of equipment to send there to stop Russia, and Russia spent I don't know, 10 billion. Is that really a win? And is there something deeper and darker? Who knows? It's just an interesting statistic. Like I said, everybody's asking for a lot more money to spend. Things in the defense industry will go booming. That typically is what you see in war. Defense industry spending goes crazy. And again, a lot of our economy is run by defense spending. So it's a very interesting scenario. All right, with that, let's go over and start looking at charts here. So we will start off with the VIX, okay? Basically, the VIX started to come down yesterday. In the overnight, we didn't hear much. And then today, it's done nothing but go straight up. And again, there's a number of factors. We just talked about them. Some news-related, some necessarily not news-related. Consumer confidence down a little bit. For the most part, I mean, being up 14.88% is not a great recipe right now. And again, the VIX is not a supply and demand-based commodity or anything like that. It is basically a fear index, right? We mention every week. It's a fear index on S&P options and how much volatility is baked into them. Volatility as well as fear. You can see the indices are getting smoked right now. 1.6% down, 2.55% down. Tesla is down 10%. I mean, these are big, big numbers, right? Yeah. To say that it's all going directly to the dollar, You could kind of say it's true, right? I mean, every time I come to this chart, I have to move it higher. We're now at 220, 102.25 or 102.20. Yeah, 102.24.8 is what it touched. It just poured into the dollar. Okay. Now, it is an interesting scenario, right? I mean, again, we know that the U.S. is going to raise interest rates. The question is how far. The data is justifying an even bigger rate hike than we assume. The thing is, you want to make sure that you get in before they actually raise it, because once they raise it, it's already baked into price. That's kind of what I think big money has been doing this whole week. Again, some of it's a flight to safety. If the world's going into a recession, it's kind of like, all right, well, what do we do with it, right? Where's the safe? Where's the safe haven? Well, we know the U.S. is about to raise the interest rate, and again, that's supposed to spike it. That's probably why we're seeing so much movement here, right? We haven't talked about a recession at all. They haven't said recession, but they haven't said there's not going to be a recession yet. The goal is not to have one. So right now, again, it's kind of a flight to safety, and that's it, okay? It's not a flight to risk, right? Risk assets are all down, right? Commodities are up, and again, that's because they're paid for in dollars for the most part. Cryptos hammered 4%, right? Again, Bitcoin 4%, Ethereum 4%, down to like the 38 range. I mean, they're getting, Dogecoin down 6%, and then bonds up from where we were yesterday, a little bit pullback right now. But you're going to say, wait a second, why the heck are bonds going up? It's a flight to safety. So today is really about a flight to safety. And again, could it be the Lavrov comment? It could be. It could be Russia going, mentioning things to Japan. I don't know. Like I said, does Russia want to have battles on multiple fronts? Absolutely not. They know that, right? So it does make me a little bit more nervous now when they're making comments and mouthing off. As well as, don't forget, I don't know if you guys saw this or not. It's not up here. Don't see it up here. North Korea. You guys remember North Korea? Yeah, those are some fine people there as well. They made comments about they're going to accelerate their nuclear I guess if they had a military parade, that they are accelerating their nuclear research campaign, whatever it is. Again, what else are you going to do to that country? You can't really sanction them any more than you already do. I think there's zero we could do to them besides going and invading them. But if we invade a sovereign nation, then God knows what happens, right? Yeah. So, I mean, they have every right to defend themselves, but that's also not a great comment that nation would have nuclear weapons. So, and could Russia just say, hey, they're our closest ally. We have to give them a nuclear weapon to combat U.S. aggression, right? I mean, that kind of sounds like it comes right out of the page. Another reason why the VIX has also spiked up 14% today. So, lovely news, right? Anyway, with it kind of topping right here, again, a lot of this is now baked in. It is noon. We'll see if we can start to get a reversal and kind of a lowering, right? Maybe today, maybe not today. We'll see. But as I mentioned, dollar also sitting definitely close to its peak. I mean, this is definitely on the high side for the dollar. Always got to be cautious when it is at such an extreme range. And I'm throwing fibs on this one. And again, dollar index is a little bit different. I was just seeing where there was, hot spots as far as, prices go. Again, obviously looks like some basing and a testing off this 101 level. That would be a level I'd watch for on the way down. The 23.6, I'm not really concerned about that as much, but I like that 50% number right there. And 101 is, again, any of the big numbers is going to be a psychological level. So ES today. So ES is dropping all the way down. We talked about a target of 41.90. It got pretty close. It ran into the same, move this over. It ran into the same buyers that stepped in here. Right there. It ran into the same buyers that stepped in originally right here. Actually, let me do it with the box. There were your sellers, and that's exactly what it ran into. I'm going to turn this a little bit darker. There we go, so we can see it. That's what we ran into. And magically, actually, I guess it wasn't 10:30 today. It was 11:30 the day that it rolled. But in the overnight, we talked about this pushing down in one of our other sessions, and it did. It came back up. It grabbed that level. It based in here. It's funny that it bounced right off of it again. But we had a 50% retracement level from our previous high to low. This is kind of a European takeoff. About 2 o'clock in the morning is when this started to move. And it pulled down and came back again. And then that 4:30, 5:30 time frame, it's like, yep, we're not going any higher. That's it. It just kind of sandbagged it and launched it to the downside. And again, a lot of those headlines, not necessarily great. Is it justified? Yeah, I've seen the money go towards the dollar. A lot of people are looking at this and saying, yeah, we need some safety, right? Excuse me. And again, is it justified? Off the news headlines, I mean, the news headlines are just that until there's any true action. But I would say it does kind of make sense, especially seeing the flow back into the dollars. and looking at all the other risk assets out there, all that money coming out of risk, it makes absolute sense. So if you're able to grab this one early at a 50%, great level. And again, you've had quite a morning already. You had a 100-point drop in it. So again, nice little trade setup. We talked about this level and we had buyers here at 41.92. It grabbed the close buyers. Now the question is this it for the day, right? Is this the turning point? With as deep as the VIX is, I mean, again, 14% is quite a lot. It does look like it's trying to kind of slow down a little bit and kind of peak, but 14 is quite an extreme level of fear. Okay. Now you could take this level here and go from high to low and say, well, wait a second, look at that. We're at the 23.6. If I had to make a determination, if you had to say right now, look at this right now, where is it going? I would say based off of these factors, this high to low, we're seeing kind of a red candle right now. It is 12:30. We are going to start getting momentum in. It only retraced during lunchtime. I would say it kind of looks more like it's going to be a red, more of a red day today than anything else. It's going to continue to be red. Fib traders, when they come back from lunch in the next 30 minutes, are going to look at this and say, hey, wait a second. When I want to continue this, right? Standard, what it tells me standard is when I have this 23.6 pullback, that's where I go long. That's where I go short, right? That's where I jump into the trend continuation. And that's what it looks like you're going to see right now. Now, this is an old level. There was some chopping back and forth there, but we've had now 2 punches at this level. Do we come down and grab the lower one? Probably, but that's past the 100 level anyway. So it's kind of a decent mover, right? If you're looking for something as well. So, looking at the ES, it's like, yeah, it's probably not the reversal for the day. Looking at this, it drove down to 11, really 12 o'clock when people went to lunch is when it pulled back up again. I mean, could I be wrong? Sure. I hope so, because it would be nice if it was a little bit higher. But as I said, 14% in the VIX is a lot. You're not typically going to see the VIX go up 14% and then down 14% all on the same day. Okay. NQ, I think, is also a valid one to talk about. Now, I kind of drew this earlier for NQ. In the grand, in the big push top to bottom, the 50% up is at 13,739. Now, if you take the smaller version here and down, you can see they were coming up and the 50 got broken and we kind of played with the 61.8, and that's where we kind of did this base right here. Wasn't as clean, but I think overall we were looking for this to drop to the downside. Now, we were looking for 13,220.50, right? I was mentioning earlier that with Microsoft and Google, again, almost $4 trillion right there, right? They are reporting their earnings later today. Now, they're both tech companies, right? Supply chain, they're software more than anything else. Supply chain doesn't really affect them as much, right, as other companies will. With a huge push down today, you're going to have profit taking. And if they blow their earnings out of the water, that should be a big catalyst for a bullish movement in the NQ. Now, is all this justified? Probably not. It has kind of extended a little bit far, right? Is this where it should be? It's probably a bit overextended at this point. Doesn't mean that those two companies could have horrible earnings and again, could it be a catalyst for it to drop? It's kind of hard when they're getting slaughtered today. It's kind of hard to have two bad days in a row with earnings. Like I said, you see Google and you're like, wait a second, Google's down how much today? It's who's selling it, right? If they sell it, if you're selling a ton of Google and then Google has bad earnings, it kind of throws up a red flag of what did you know yesterday? So you tend not to see that too often inside of the markets. Because again, remember, big money is moving this. If big money is shorting the heck out of Google today and then they bomb their earnings are bombed, you got to question how did that large company with all those trillions of dollars out there or billions of dollars out there, how did they know to short all that the day before earnings came out? So raises a lot of red questions, right? A lot of red flags. So right now, again, I would say that this one is kind of similar. If we take, top to bottom, you can see that we are also, again, using this old level that got broken. This is one of those violated zones. You can see it came up and touched the 23.6 as well. So is NQ going to continue to go deeper today? It could, right? It could. Question is, where does it stop? And I think that's the bigger question in preparation for earnings later today. Now, right now, it's a decent top. And again, it was very, very sharp. So buyers stepped in very, very fast at 13,091. Let's see. Here's a small zone right here. And actually, it's funny. So here's a base right here. And we'll continue that across, as well as there was a base right here. Again, popped up, came back and touched it. So let's push both these across. Oops. Thought I had it zoomed out enough, but I guess not. And look at that. So literally took a bounce right off a level that we had marked. Look at that, right? Small base, small confirmation touch, and bam. So I would say right now, if you are looking to get short this position, again, you could figure out where the actual kind of zone is. Zone's probably marked off in here. And again, as long as we don't have any major push through the top side of this one, this would be a level that I'd be looking for any type of a retrace, or not a retracement, but this could be an entry back to the downside. Now, it is a little bit wider, and again, I would assume that it comes down to a touch at least this level. It's not necessarily a bad move to the downside. It's about, what, 96? Yeah, about 96 points, about 100 points. Could it go farther than that? Yeah, sure, absolutely. But this will be a level that a lot of fib traders are looking to continue the momentum with, right? Take a big push, top to bottom or bottom to top, wait for the 23.6, and that's where you continue your trend. And you go from there. Now, I don't mind it as much because, again, it was a level that we saw buyers off of. Remember, this is that Harry Potter trade where we break through, we base, we pull back up to that same violated zone, and then we use that as the a way to define our risk. By defining our risk here, that is also pointing us back to the downside. All right. Now, YM. YM, as you can see, it's not the grand piece, but once we got the actual slowdown in the trend, we took the kind of the new high, not the new high, but the basing high to the basing low, the last strong trend. You can see it did the same thing. We had a violated zone here that we had marked off in this yellow. It wasn't a zone we wanted to trade off of, but it was a violated zone. And magically, the old violated zone right here, right? We talked about a break at 3,400. We broke through and it actually retested it once here, came up and touched it again. It's like, oh, there's sellers here, and then touched it again, which also happened to be at 50%. So we've retraced all the way back down to the bottom, okay? Now, I think at this point, it's also important to say, okay, well, wait a second, what's going on here? Well, this one just also happens to be at the 23.6, kind of the same setup. Could it push lower? Probably. I would say this one probably is down into that level of where we're looking for this to go. We had a target originally of 33,170. Would not be surprised if YM is able to get down there today, okay? And again, talks of supply chain shortages and things like that, also not necessarily what you want to hear for the YM. Raising interest rates, not necessarily the best. Consumer confidence in core durable goods, again, durable good orders are down, also not good for the YM. Consumer confidence also down, also not good for the YM, okay? Those are all adding to this one. So I would say that these are our two downside targets for today. Russell, okay? Russell has retraced fully at this point. Again, we had the Harry Potter trade over here. You can see that we came up. This time we had these two levels drawn, right? We talked about two buying areas. It got sliced through, and actually it did base in one candle pull back and showed us that, hey, listen, there's sellers there. You can see that when I did that top to bottom down, that same old level of sellers also happened to be a 61.8 level and literally banked right off that 61.8 in those confirmed sellers and drove it all the way back down, okay? Now, taking it more near term from here down, you can see as well, 23.6 shows us there's some sellers there starting to push lower. Now let's see, where does this level actually here bounced off a few times, so we don't need this anymore. Let's pull that one off. Oh, this is the one all the way down here. Yeah, so we're in a racetrack right here. I would say that this is probably our new down target. Bring this across, and then I'll get you guys a number for this one. Let's see, 1893, right? 1893.6, 1893.5 would be where my downside target is for this one. Okay. Now, if we can get down there by like 2, right, 2, 3 o'clock, could we have at the end of the day rally off that level? Probably, right? This is a pretty decent move, 1.9% down today. It's the second worst. It's a potential setup, right? Potential setup. But I wouldn't really want to jump in front of this one and call the bottom. I would say, 1893 is bottom first. Wait for a confirmation if you're looking for it to reverse it, and then take it long at the end of the day rally. That's how I'd try to play that one. All right. Real quick, not that we can trade these in Nadex, but let's cover them real quick. You can see that Twitter was like, yeah, he's buying it. And now it's, again, trying to sell it. Again, number of reasons why he could be, trying to get some money, trying to get some funding. But again, shows you there's one of your big draws on the NQ. You have Apple also running into levels, but look at this. Look where Apple is right now. It touched down to this 158 region. Looking at over here, you can see that at the 158 region right here, there's a bunch of selling happening or a bunch of buying coming in. And we even had a little confirmation. So, extending this across using the same methods that we use, you can see it's kind of where we bounced off of. If Apple's able to kind of break its trend and go higher, and again, I don't think Apple's like a bad company or anything, but there's what you're kind of working with right now. Actually, it's from there, right? we'll see if this one gets a continuation. I don't think Apple inherently should be, I don't think Apple's inherently bad, although the lockdown in China definitely does hurt Apple profits. Tesla obviously taking it on the chops today, and again now, Elon's trying to fund the Tesla purchase. We talked about this gap level for a while. This is a huge push, and again, could this be considered a parabolic move? Sure, it could be. Again, is it going into a level of buyers? I mean, here's a gap right here. There's your level of basing, right? There's your kind of takeoff point, right? There you go. So could Tesla reverse? Sure, it's kind of lined up for that. So just be cautious with it. Let's jump over to currency. So currencies. Aussie dollar. So this is in preparation for tonight. Okay, so we've added a couple different levels in here. We can really remove some of these now. Let's take this guy out. Let's remove a lot of these. That was good. That was good. That was good. This is still fine. We had a level there. Let's drag this down. We don't need this one anymore. I don't need this. That I'm going to keep. This I'm going to put in here as well. All right. So right now we know we do have a little bit of a level coming right below. So we had a Harry Potter trade set up here. We're kind of pushing into it at this point. I don't think. We have a confirmation here. Okay, and this is at 70.96. I would say right now, this is kind of a level that I'm looking for. Now again, we got plenty of time. We got 9 hours to go. This is about 50 pips away. We can absolutely move 50 pips in that time frame. And again, the news I'm talking about is right here, right? The inflation rate year over year, all that kind of stuff. And you may look at this and say, well, I don't understand any of that stuff. Year over year, it's 4.6%. Okay, their kind of planned inflation target is 2. So this is over 2.5 times what it's supposed to be. Hence why it's kind of a big deal for them. So an easy way to look at this, and again, when we get to the dollar CAD, I'll show you how to play it. But I would say that this is something to watch out for those of you that want to come back later. You don't have to follow it right now. I would say that it's probably more of probably more of an intraday thing right now. That's kind of where I'd be looking for a short. It doesn't have enough room to run 1 to 3 before we get down there. Could you do it? Sure, you could. We'll see what it's able to do from there. But I think if we can get price, again, 50 we can cover in the next 9 hours. If we can get down to here or somewhere close or somewhere basing below, I think this could potentially be a long opportunity. Now, if it does nothing but run up, and it can run all the way up to here, or maybe the news comes out, it comes up, then we could take a short. I think there are 2 trade potentials here. You could take one pre-news, and there's also a post-news move here based off of where it is. It is sandwiched between 2 areas, but the ones that I would watch out for, again, kind of setting up short ideas, right? 70 to 11. It's already based, it's pulled back, and again, right now, if it turns and does nothing higher, that's also the 23.6. So again, a couple confirming signals there. Where we are right now, again, it's only touched at one time. It's pushed a little bit in there. I think, if this is where it's going to rally off of, again, yeah, we're looking to get short before the news. If it does come all the way down, though, on the opposite side of things, I'd be looking for a long entry down here at 70.97. Now, those are how to play it beforehand. Afterwards, if it spikes in either direction, again, you play the reversal, kind of that parabolic move. See a huge candle, and then you play the reversal of it. These would be 2 zones that I would also be looking for that, as I think it has potential for it. Also, yen, kind of the same setup. We already know that 90.37 is a level. We had a deep touch here, and again, it broke through, so we no longer need this level. I don't need this level anymore either. This one came up and got touched its target. I don't need that. Let's pull all these old ones off and draw new ones. Let's see. Right now, go high to low. You can see that the 23, yeah, there's something over there. It's been there. But I'm looking at this 50, and I kind of like this 50 level for down the road, right? Again, nice base, nice touch, nice confirmation, nice push through. So again, if we have a rally, if we rally up from here, 93.32, I'll leave that there. I don't need this guy anymore. Otherwise, this one needs to move. That's 80 pips. That's a lot. Let's see. We're going to draw all the news here as well. I don't know that we're going to be able to go 80 in this one. I do think actually the Aussie yen, I'm actually looking for long opportunities there. I think the yen has gotten so much strength today. I think it is due for a bit of a reversal. I am curious to see if that reversal will come in because remember, 9 p.m., 9:30 tonight, we're in the Asian session. So again, you have Aussie and Japan both actively moving and trading. I'm wondering if that's where this is going to come in. And again, if it stays here, could this be a takeoff point? I would say potentially. If we're still sitting here around this level, could this potentially be where the bottom is for tonight? It could be, right? It absolutely could be. But I'm kind of looking more to get long the Aussie. I think it's just gotten beat up so much today, and particularly against the yen. The yen has gotten so much strength today that I think the opportunity is there for a long on it. Okay. Now I'm going to jump ahead all the way to the end over here at dollar CAD and talk to you how you can potentially play it. I need to make sure they cover all the currencies in the next 15. But here's kind of, we were sitting over here yesterday, right? When I was talking to our group, we were sitting over here yesterday, and this blue box is one of the knockouts. Okay. Now this line right here, I knew that I knew that Macklin was speaking. It'd been on the calendar for a while. We were able to pre-plan for it for a while, and I said if price drives itself up into there, even though oil was doing great, even though it should have given the CAD strength and it gave it nothing but weakness, we were looking for some type of a reversal. And I said, depending on the time and things like that, none of the call spreads made sense. There was a knockout sitting right there, and there was two of them. There was one that had about 1 or 2 more pips to go, and I was like, I don't think this one's there. It's just not enough buffer. We got about 30 minutes before he speaks. It's probably going to get stopped. It did. It got stopped. The next knockout above it was about 3/4 of the way into a zone of sellers that we loved. And what happened? It came as high as like here. Actually, this candle, let's see. I'll move this over just one. Yeah, so it basically touched this zone, right? When we looked at this, right, we looked at this actually right, it would have been right there, right? It was about $25 worth of risk, making 100 in the other direction. The nice thing about this is, right, there was no expiration on it. The expiration is Friday. It went down, it kind of came back up, and it just meandered itself all the way to the downside. Easy, very simple kind of base trade. Why? Because I was able to look yesterday and say, Macklin is speaking. He's testifying. It's a major high impact news. And I knew there was near a bunch of sellers. So with that information, you can say, hey, listen, I know that I have specific regions here. I know that I have specific regions here. And do I have anything big today? Why, yes, I do. I have CPI quarter over quarter, which is inflation is obviously the hot button of the world right now. Okay. The other thing, again, not always, again, if you're not familiar with knockouts, make sure you try it demo first. Another thing that you can do as well is look for something a little bit farther out of the money in a binary. There was actually a binary that was all the way down here, right? The 2710, it had $13.75 risk to get into it. Super, super cheap to get in. And it took most of the day to do it. But if you risk 13 and you wanted to make 3 in the opposite direction, you only need to make, even if it got basically down to $50, which it did, right? Nice little trade. Something easy, and you knew it off of again because of high impact news release, and nothing was really said, right? And now we're higher than we were a day ago. So again, using things like this, looking to see where the floor and ceilings are of call spreads, knockouts, and then sometimes even binaries out there. And again, I actually don't personally love the dollar CAD binaries. I like the other ones just because of the spread widths. I don't think they're as good as they could be. But different options that different ways to play the same exact trade setup, all using these economic calendars. Let's see, Euro pound. So Euro pound has taken off, and again, makes sense why. This is really since this morning talking about recession. It's not really a good word. Nobody really wants to admit to recession, and that's why we're seeing this one drive higher. We had an area here, but it had been chopped through. We had really no idea, just no intent. Whoops. We had no real intentions of going short on this one. It's just been pushed through many, many times there. There was a little bit of a zone sitting right here, and this one's kind of snuck in. There's not much past this one. So if you were looking for a reversal in this, and as I said, this market's closed now, so I would expect a bit of a retracement. Like where can this one come to? I don't know. Kind of two things I'm looking at. One, this 786, I don't really throw a lot into the 786. Normally, once it hits it, that's my cue to delete it. It is hitting a 786. There are people out there that do look at it, but I think this is a reversal opportunity. Their market is now closed, so it has less factors going on. There's just comments and things like that. Their banks are not doing anything. It's not a very big risk zone. You're talking about 7-8 pips. So I mean, could you get into something along this line and say, hey, listen, it's a 786. There are people here. Yeah, there is. There is sellers, right? When we look back, there were sellers here, right? Huge push down. It came up and it based in one candle, and then boom, it went back down again. So there are sellers there, right? But again, the market is not open. It's kind of off hours for them, and that's kind of what makes you kind of hesitant. But it is only 7-8 pips, so it's not a very big area. Now, if it does break out the top, okay, if we do break out the top of this zone, right, we also know that we have nothing over here. There's no pullbacks. There's a couple small little wicks, but there's nothing really stopping there. This is a range of about 45 pips. Question is, if they continue on this recession talking, is this going to be an opportunity where this goes through the zone, breaks it, right? When it breaks it, we're looking, hey, give us that Harry Potter. Give us that sweet, sweet Harry Potter, right? If that thing's able to come through the top side and then gives us a little bit of a base, a pause, and pulls back again, now all of a sudden we have a defined risk level and we look to take this long, right? So again, depends on what your risk tolerance is, how aggressive you want to be with it. But that's kind of how I would look at it. Again, if we start the base in here, that's kind of my sign that, hey, listen, it's time to go high. Again, you could take a one bounce and then wait for a second bounce and kind of reduce the risk on it as well. But I think there's two great opportunities at euro pound. I do think, again, the market's closed. I think we will retrace some of this losses today. To say that Europe will not be in a recession, I think is also, yeah, I think Europe will be in a recession longer and harder, especially if the gas is shut off. Euro yen. So here is the weak yen. Oh wait, this is strong yen. Yeah, it is. This is basically everybody saying, "Oh my God, it's so weak, it's so weak, it's so weak. We should intervene." And I mentioned to everybody, listen, you got to get short. Again, 140 was the trigger on this one in the euro yen. You can see there was a level of buyers, right? But we had it 1, 2, 3, 4, 5 started the base there. You're like, this sucker's going down, and it did. It blew all the way through, and it's continuing to push. Again, right now we had targets at 136.24. Those targets are actually gone at this point. If this is the bottom, we can actually take this and say, hey, wait a second. We know people are going to want to continue this trend, right? They're going to use the 23.6. And again, there is a zone sitting there. There's this level of basing right there, right? A drop, kind of a little bit of a hiccup and a base, and then boom, it exploded out. These tend to be pretty nice little setups, particularly when it coincides with a 23.6 pullback. Why? Because again, you have the force users and you have Han and Chewie all at the same time, showing you what they know, right? I like those. I like these kinds of levels, right? And again, that's 136.50. Oh, look at that. It just happens to be the 50. It's also a psychological level. So a couple different things all in one. Again, just ways to stack your odds there in a potential short. Euro yen, really, even this level down here, this green one, right? This 134.44 level. I mean, we have some yellow levels in here, and that's what it bounced off of. It's quite choppy here to figure out where the bottom's going to be. I like to have clean base levels. Like this is a clean top. I like that top. None of this is really clean. I mean, this is a level we had drawn from earlier in the week, and you can see it literally bounced off of it. Am I willing to step in on this one? No, it wasn't high quality enough for me to do that. It's always nice when it does. It just shows you that supply and demand is a real thing. But it's not a level that I would have jumped in front of. I think waiting for 136 is decent. And then again, I think this 134 level, 134.45 is decent. Is it the best? Maybe not. Euro dollar. Euro dollar is also on the same trajectory. It's finally gone through. It broke through this first level. It hit it. It hit it again. It based along the top. It tried, and it was like, oh, finally, it went through. Actually, it based before it went through. So it's through right now. I would say right now there's nothing really slowing me down on this one until we get all the way to 105, and this is a level we talked about before, 105.88. Right now, the 23.6 doesn't really make any sense to me. I think this one is just continuing to chug through. I wouldn't say that there was any major trend changes here. I would still mark off this 107 figure. It's not at a 50 or anything big, but this 107.55 was a level that, although it was an old zone, it was violated. It did withhold 2 punches through, so it's a level that I'm kind of watching out for, kind of almost like a little hidden level right here, right? Got to wait to see what that one does when it comes down. But right now, I think staying short the euro dollar is fine. It's a little bit late to get into it now, but if you are short, my overall target would be 105.88. Now, pound yen. Pound yen continuing to deteriorate, as it should. Like I said, we're seeing yen strength across the board. The pound talking about recession. I was like, oh, recession, that's so bad. Yeah, everybody's going to be in the recession soon. So right now, I'm not really looking for much in this one. You can see we have levels down south. Here is a level, one of our old targets. This was a target level. It's in black. If I extend this across, you can see that that's pretty much exactly what we bounced off of as a target level. Wasn't something we're looking to get entered off of. I mean, so again, it's nice that it bounced. You're like, oh, you could have went long. Not really. It was more of a target. Again, it already established level push at the end, and then we knew we had a touch there. So we wanted to see what that looked like. We do have one right below it, and that's where the 160 number comes in. Right now, we're only 70 pips from this 160. I'll put a horizontal line on it. 160 is right there. So we're very, very close. 160 is a very large psychological number. They will talk about it a lot. When do we get into this one? I think once we really have a confirmed bottom. I think this has deteriorated so much in the last 2 days. I think it's due for a little bit of a reversal. Again, once we start to see that yen profit taking come in, as well as, the market basically we're like, yeah, I got it. UK recession, no problem. I think this one takes off, but I don't have a confirmed bottom for it yet. 160 is going to be a big deal. And then again, we have another Harry Potter. If it continues to deteriorate below 158.87, we're looking for this to drop even more. Pound dollar. Pound dollar also is just rocking through. Now I have two yellow levels. Yellow levels mean that they're not as strong for me. They're not, I'm looking for like kind of confirmation bounces off of them. This one based right before it, which means, yeah, it's breaking. And it did. And it's coming back down. And we're starting to come up to the next one, the 125.50 level. It's kind of the same thinking. The pound is the most negative right now. The dollar is the strongest, arguably right now. So for me, I'm not really looking to kind of change this. Again, this is one of those things where, for me, for supply and demand, right? It's very much finding tops and bottoms is what it does, right? Finding reversal levels, and you can see I keep drawing my lines from across, and it keeps bouncing off them left and right, right? As far as continuation goes, you really kind of need Harry Potter's the break. There's momentum, continuation trades. It's easier to draw fibs because every time I draw it, I can keep extending it and dragging that 23 all over the place. I actually can't make lines up, unfortunately, with supply and demand. I have to use the zones that I'm given. I have to use what I've been shown. I don't really have anything lower. So it's kind of one of those ones. Once the trade really takes off, it is harder to get into more trades. Now, we do have a violated zone. So could we turn this zone red? Yeah, you could turn that one red and say, all right, listen, when we're getting our base now, if we get a pullback, could we get into a short position here? And the answer is, yeah, you could. But unfortunately, it's not. I wish there would have been, again, basing above, basing below are decent. But if anything, I would probably readjust this one and say, hey, listen, right here, this would be the level that I would actually, I'm going to change it purple so it's different. That level is actually bisected right by the 50% retracement if this is the bottom. If we do have a pullback, I kind of almost would say, hey, you know what? Give me a little bit. I want a little bit more, right? If I miss the trade, it's not the end of the world, but I'm kind of looking for a little bit more. Like I wanted, 126.72 would be more the area where I'd say, you know what? I like that base. I love how it pushed out. 50 to me stronger than the 23.6, right? Not as many entries, but they tend to be a little bit easier entries, more set and forget type trades. I like that zone a little bit better. Dollar CAD, I already showed you guys. Again, dollar CAD, I think, does come back down again. Again, oil's up 3% today, and the CAD's getting smoked. It just goes to show you that this one is, again, quite a political-based pair. Again, the dollar is very much stronger than what oil is. So dollar Swiss also not tradable for me. Again, we bounce off this level 1, 2, 3. We expect 4 to break. It actually it peaked its head and came back down. It hasn't left the trajectory yet. I'm not really looking to do much with dollar Swiss. Again, talk of God forbid Russia puts does something with the Japan. This should go higher, right? But right now they've already sanctioned Japan, so they're no longer they've removed themselves from the kind of always neutral kind of status. So I'm not sure how that's going to affect them in the future, but no real setups on dollar Swiss. If anything, again, if the dollar charts a weekend, you can look for shorts, but not necessarily the best. Now, dollar yen. Okay, this is strong. The yen is still winning this one. It's funny. You look at it, you can absolutely see it without a doubt. If I draw, hey, listen, there's a trend line. I'm touching 3 times. Oh, wait, look at that. So really in this one, we were looking for shorts below 127.60. We didn't get a Harry Potter entry here. It came down and came right back up again. It didn't really give us the entry. It came down and it based. It didn't really give us the entry. It went all the way down to our profit target on this one. It's unfortunate when that happens, but we were looking for, and it's funny, it didn't quite hit it, but we had a yellow zone there and it bounced right off of it. We're really looking for this one to come down to 126.63. Again, I think we get the yen weakness in there. I think we get the dollar weakness. Right now, this is a battle of strong. The yen is winning. But eventually, both these two currency pairs are going to kind of start retracing as profit taking comes in, and then it's going to be a battle of weak, which is not necessarily my favorite scenario. So, we talked about the short. Right now, if you want to play it, again, easy top to bottom channel on this one. It's really been following it. I mean, it's been a pretty decent follow. I mean, there's your 1, there's your 2, there's your 3. We almost had 3 other ones, and then same thing on the bottom side, 1, 2, and really 3, 4, right? 3, 4 is right there. So we had 4 touches. So it's a pretty consistent downward sloping channel, okay? And I think, again, I kind of agree with where this one is going. Now, I mentioned Bitcoin again. There's the Bitcoin chart. It spiked up yesterday. Yay! And then Fidelity came out with it for 401ks and went boom, all the way back down again. So it's down 29% in a year. So go for last 6 months, go Fidelity, right? Go Fidelity. Again, this is risk off. Okay, this is pure risk off. Now, commodities are not considered really. They're considered essential, right? Earlier this morning, when we did our first presentation, we talked about, hey, listen, we're at the 50. We were pulling back to a 50. We had a level of basing, and what did it do? It did. It shot all the way down until about 10:30, and 10:30, as you guys know, favorite time of the day. There's your reversal in an area right here of buyers, and boom, you're off to the races. So if you took the short again at 9, you got, I don't know, dollar. What is this? $1.30. $1.30 short off to 50% retracement and a fib. And then what did it do at 10:30? You got to be thinking, hey, it's 10:30, it's going to reverse. It did. It came right back again. And again, if you want to run your fibs on this one, just because it's always fun, 50% retracement off the low to high at an area of buyers confirmed, and boom, off to the races. Whoops, wasn't trying to do that one. So with oil right now, I do think oil is going to finally come higher. Again, we had these kind of 2 channels, and we're looking for breaks out of both sides. Those are done and out now. I think we're at the 61. We did blow through. I'm not really super concerned about much of this until at least all the way up top here, right? Can this go all the way back to 104.68? I want to say yes. I mean, it's going to have to grind through because of what we see here. And do I want it to? No, but it has the ability to do it. So I would say right now, we're seeing risk off, buying commodities is not a bad thing, especially with the dollar going up. That's up 0.24%. I think oil today, target is 104.68. Again, 4:30 today, or I'm sorry, 4:30, 5:30. The API oil inventory report will set up the oil inventory for tomorrow morning. We will talk about that tomorrow. So again, catch us on the morning show. We'll discuss that. Natural gas. There we go. Natural gas back up again. We talked about a small trade at 7. It was a target first, and it kind of came up and retested. It got up to about a 1.5 to 1 before it kind of turned. I think natural gas is very, very risky to be shorting. We did have the short last week that we talked about. I just think at any point that this one, they could be like, you know what, we decided we're turning this off, right? I think this has the ability to pop more. It's just a risky proposition at this point. But again, it did on a purely technical basis. Again, we did run into the right area. Actually, this should have been, oops, there and there. So yeah, it doesn't really change much. If you're short, you're still short. You're still profitable at this point, but use caution. Gold and silver are totally confused. Gold is really not trending anyway. It says up 0.34%. It's kind of found a bottom here at 1894. I wouldn't say that it's really trending either way. It's kind of flat. I think if anything, wait for it to grind up, grab one 1915.93. Again, that'd be a 23.6 retracement, right? In the big move from 2000. I think it has the ability to go lower as well. And silver, totally confused. Obviously weaker than gold. Typically they go in the same direction. You can say, well, wait a second, gold's up, so it should be up 0.6%. No, it's down 0.08. And I think this one goes lower. I mentioned hitting 23 in the next day or two, and I think that's still on the cards. So yeah, that's it. Like I said, I think watch the VIX. I think as far as calendar goes, watch your CPI tonight, and again, watch some of these headlines. Consumer confidence. U.S. consumer confidence eases as inflation surges. Just what we wanted to hear. Inflation is surging, and the Fed's not doing anything about it. So, yeah, fun. All right, so that is it for today, guys. Make sure you mark your calendar. I can't believe I'm saying this. May 3rd, next week, we are officially in May. It's like, oh my God, summer's already here. My kids are going to be out of school, and yeah, insane, right? But May 3rd, mark it off. If you guys have questions for me, go ahead, support at keeptradingsimple.com. And again, may take a couple days to get back to you. Thank you for joining today, and I will catch you guys next week. Thank you much, and have a good one. Take care.